Grid failures, oil shocks, green mandates colliding in 2026. The 1% aren't waiting for the lights to go out. They're already positioned. Their energy winners list inside. Welcome back to Wealth Architect. I'm Dr. Ben. You already know the usual money rules were built to keep you waiting 40 years for scraps. Today, we're looking at something different. The real shift coming this year, when power grids buckle, oil flows get cut off, and rushed green rules create more problems than they solve. The wealthiest families saw this setup months ago. They moved capital into the exact places that turned past energy chaos into 5 times gains. This episode shows you the 3 forces colliding right now, the proof from history, what they hold today, and the straightforward versions you can actually access. This is not financial advice. Let's build the blueprint together, step by step, number by number, so you walk away with a complete map you can use starting today. The full 2026 Energy Reset Blueprint. Let's start exactly where the 1% started, by looking at the 3 forces that are already locked in and moving together. Force 1. AI data centers are eating the grid alive. Every new ChatGPT-style model needs racks of servers that never sleep. A single hyperscale data center now pulls as much electricity as a city of 300,000 people. The U.S. alone has 241 gigawatts of new demand already in the approval queue. That's more than the entire current capacity of California and Texas combined. PJM, the biggest grid operator in the country, just issued a formal warning. Winter peaks this year could break every record, and they openly say they do not have enough generation or transmission lines ready. Texas ERCOT has already seen rolling alerts in 2024 and 2025. Europe's grids are in the same boat. Germany's Energiewende left them with voltage instability every time the wind drops. What does this mean for your life? Higher electricity bills, possible planned outages when you need power most, and companies passing those costs straight to consumers. The 1% read the same reports you and I can read, they just acted first. Force 2. Oil supply shocks are already here. Right now, the Strait of Hormuz, the narrow waterway that carries 20% of all seaborne oil, is under direct threat. Every time a tanker route gets squeezed, prices jump $4 to $10 per barrel in a single week. We saw the exact pattern in 1973. Prices quadrupled in months. Today, the same math is playing out. Refineries on the U.S. Gulf Coast and Europe are already paying higher spot prices for crude. That flows straight into gasoline, diesel, jet fuel, and plastics. If the choke point stays blocked even for a few months, the ripple hits every supply chain you touch: food, medicine, shipping. Again, the 1% did not wait for headlines. They repositioned months ago. Force 3. Green mandates racing ahead of the hardware. Solar and wind set new records in Europe and parts of the U.S., yet every major grid operator now admits the same problem. When the sun sets and the wind stops, the lights flicker. Batteries cannot yet cover multi-day gaps at national scale. Transmission lines from remote wind farms to cities are years behind schedule. Last year alone, billions of dollars of clean power were curtailed, literally turned off because the grid could not move it. Meanwhile, household bills kept climbing. The mismatch creates exactly the kind of instability that makes reliable baseload power suddenly worth 5 times more. That is the reset moment. Those 3 forces do not cancel each other out, they multiply. The 1% treat this as a math problem with one answer: own the assets that actually deliver power when everything else fails. Now, let's look at the proof from history, the exact resets that created the biggest winners. Go back to 1973, OPEC embargo. Oil prices quadrupled. Texas oil producers, Alaskan pipelines, and coal companies posted returns of 300 to 800% while the broader market crashed. The same thing happened in 1979 with the Iranian Revolution, another 400% move in select energy names. Fast forward to 2022, Russia cuts gas to Europe. Natural gas prices in Europe hit 10 times normal levels. U.S. LNG exporters made fortunes overnight. Uranium jumped 150% because nuclear plants kept running 24/7 while solar and wind could not. Every single time supply gets tight and grids strain, the same categories deliver the multiples. The pattern is so consistent that family offices now keep a permanent energy reset sleeve in their portfolios. They simply rotate more capital into it when the three forces line up, exactly like right now. Here are the exact positions the 1% are holding today, ranked from the ones they're adding fastest to the foundational anchors. Number 10, Cameco, the uranium king. This Canadian company supplies fuel to reactors in 14 countries. When AI data centers sign long-term power purchase agreements, they almost always choose nuclear for the steady output. Cameco already has new contracts rolling in. In 2022, it rose over 140% while the S&P dropped. The 1% love it because uranium fuel is only 5% of a reactor's operating cost, so even if prices double, reactors stay profitable and keep ordering more. Number 9, Sprott Physical Uranium Trust. Instead of buying mining stock, this trust buys actual uranium and stores it in secure facilities. Billionaires use it to own the raw commodity directly without worrying about a single company's management. Every grid warning pushes the spot price higher, and the trust moves with it. Simple, liquid, and already up sharply on the same news that's coming in 2026. Number 8, Occidental Petroleum. Warren Buffett has been buying this one for years and keeps adding. Strong balance sheet, massive U.S. shale production, and the ability to ramp output fast when prices spike. When the Strait of Hormuz tightens, domestic producers like Oxy capture the full premium without foreign risk. Buffett's exact words in letters, "We like businesses that can handle volatility and still pay us for decades." Number 7, ExxonMobil. The gold standard for size and staying power, integrated from wellhead to refinery to chemical plants, survived every crisis since the 1970s, pays a reliable dividend even when oil dips, and when prices rise, the cash flow explodes. The 1% keep core majors like Exxon because they act as the shock absorber for the entire portfolio. Number 6, natural gas producers and midstream pipelines. Think Cheniere, Kinder Morgan, or Enterprise products. These names deliver steady toll road cash flow. They move gas whether prices are high or low. When renewables drop and grids call for fast, dispatchable power, natural gas plants fire up instantly. LNG export terminals are already fully booked for 2026-2028. The 1% hold these quietly because the income never stops. Number 5, large-scale battery storage and grid tech companies. Names like Fluence, NextEra Energy Resources, and specialized storage plays. Data centers and utilities are signing 10 and 15-year contracts right now because 1 hour of blackout can cost millions. The 1% see storage as the missing link that turns intermittent renewables into something reliable. Early movers in this space are already posting 50% annual growth.
Number 4, small modular reactor developers and suppliers. Companies building factory-made reactors that utilities can drop in faster than old plants. TerraPower, backed by Bill Gates, NuScale, and related public suppliers are in the pipeline. Governments and data center operators are prepaying for these units because they solve the exact 2026 problem. The 1% entered through private rounds and now use public proxies to scale the same thesis. Number 3, Global X Uranium ETF. One ticket, One click, full exposure to the entire uranium and nuclear supply chain, miners, processors, utilities. Low cost, trades in any brokerage account, and moves hard on every new reactor announcement or grid warning. The 1% use ETFs like this to add size quickly without picking individual winners. Number 2, diversified energy infrastructure funds. These own pipelines, storage terminals, regulated utilities, and transmission assets. They collect fees no matter which fuel is winning. Think of them as toll roads on the power highway. The income is predictable, inflation protected, and survives any blackout because the assets are regulated and essential. Number 1, the ultimate structure, direct ownership and long-term offtake deals. This is where the top 0.01% live. They use private trusts, family-limited partnerships, and direct stakes in operating plants. They sign 20-year contracts with data centers and governments that guarantee revenue, even if spot prices swing wildly. That locked-in cash flow is the real 5X engine. It survives recessions, blackouts, and policy changes. Now the part you actually came for. Your accessible versions and exactly how to put this blueprint to work. You do not need billionaire money. Here is the practical map. Start with the Global X Uranium ETF or Cameco shares in a regular brokerage account. Many platforms let you buy fractional shares for as little as $100. Add one oil major, Exxon or Occidental, and one natural gas name for balance. Layer in a battery storage or energy infrastructure fund for the grid tech piece. Keep the total energy reset sleeve between 8 and 15% of your overall portfolio, enough to matter when the reset hits, but not so much that one sector dominates. Rebalance once per quarter or when major grid reports drop. Use tax-advantaged accounts where possible. The compounding on these assets over the next decade is the real game changer. Practical timeline you can watch right now. Q2 2026, PJM and ERCOT peak demand warnings intensify. Q3 2026, first major data center nuclear announcements. Q4 2026, possible Strait of Hormuz related price spikes. Every single one of these events has historically pushed the names above higher, sometimes in weeks. Common mistakes to avoid. Do not chase the hottest headline stock the day after a blackout. You pay top dollar. Do not put everything in one name. Spread across uranium, oil, gas, storage, and infrastructure. Do not ignore dividends and cash flow. Many of these assets pay you while you wait for the big moves. Do not forget the bigger picture. This is one engine inside the full wealth architect system. What this actually solves for you. Higher electricity and fuel bills? These holdings rise when those costs rise. Fear of blackouts disrupting your business or family? You own the assets that keep the lights on. Worried your savings are losing value in inflation? Energy assets have historically outperformed during inflation spikes. Want cash flow that does not depend on a 9-to-5 job? The dividends and distributions from these names keep coming. Risks and how the 1% handle them. Prices can swing. The 1% size positions so volatility doesn't shake them out. Policy changes. They lobby quietly and own the infrastructure that governments cannot shut down. Technology shifts. They own every layer. Old reliable nuclear, new small reactors, gas as bridge, storage as backup. You can do the same by keeping the list diversified and staying informed through the exact reports the 1% read. Extra layers the 1% add that most people miss. They pair these energy holdings with real asset trusts, private credit, and cash-flowing businesses so the whole portfolio stays resilient. They use long-dated options on the biggest names for extra leverage without borrowing money. They lock in offtake contracts where possible through funds that give retail investors indirect access. Every layer multiplies the effect when the reset arrives. Open or log in to your brokerage. Look up the 3 tickers, Global X Uranium ETF, ExxonMobil, and one infrastructure fund. Size a starter position you're comfortable with. Set a calendar reminder to review in 90 days or when the next grid warning drops. Bookmark this episode. We'll update the list as new contracts are announced. That's the complete 2026 Energy Reset Blueprint, the 1% already activated. Blackouts are not the end. They're the moments certain holdings move ahead and deliver the gains that change families for generations. If these names and the exact steps changed how you see capital today, hit subscribe and turn on notifications right now so you never miss the next blueprint. Drop in the comments which of these positions you're looking at first. I read every single one, and the conversations here are where the real community builds. Next episode, we break down another asymmetric engine the wealthiest use to protect and grow. This is Wealth Architect. Go design your freedom.